Guys, we'll be starting the session in next 1 minute. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. This session will be this week's last session for After Hours, and I hope everyone's doing well. And before we kick off the session, I would just like to give a small disclaimer that any security that we'll be discussing today should not be considered as a buy or sell recommendation, and we'll be just doing it for educational purpose. So, without much ado, let's start with Nifty 50 chart analysis for the day. So Nifty had a very volatile moment during the day, as you can all see it with the chart. And after like muted to like a positive gap up opening of around 50 points, Nifty made an intraday high of around 17,460, but remained highly volatile uh, around those levels, and then continued to trend lower during the second half of the trading session, and made an intraday low of around 17, 345 or 350 kind of, and managed to close near yesterday's close of around 17,390, 395, 397. So it ended near the 17,400 mark, slightly below the 17,400 mark. If we talk about the gain for the week for Nifty, it was around 1.4%. So as you were talking about Nifty, I mean, last week's gain, which was a massive gain, where Nifty even reclaimed its 200 DMA along the way. This week was kind of mutish for Nifty, where Nifty just advanced by around 1.4% and was trading near, was creating new highs, but wasn't able to completely advance in any of the session during the week. But the positives, if we talk about it, is that Nifty is still trading above its 200 DMA. Going forward, this long-term moving average of 200 DMA can well act as a strong support for Nifty 50. And talking about the resistance for Nifty 50, the 18,000 levels can act. Initially, the resistance ones can be the 18,000 level, then can the 18,300, and then the 18,600. These are the previous highs for Nifty, and these are the places where Nifty rebounded during the earlier sessions, during the earlier part of the year, or maybe in 2021 as well. So these highs can act as resistance for Nifty. So going forward, let's see if Nifty is able to reclaim and go above and make new highs. It's just like 6.53% off his highs, which is really good. And on the O'Neill front, if we talk about it, Nifty continues to remain in confirmed uptrend, and the distribution day count is just one, which is really good. So the lower the distribution count, the better it is. So what's a distribution day? I like to explain it once again in this session as well, so that some people who may be new to us, who are just following MarketSmith, will know our methodology. So a distribution day is one where Nifty declines by around 0.2% on volumes higher than the previous day. So the key in this is your volume part. So whenever Nifty declines by 0.2% on higher, if it declines by on volume higher than the previous day, we count it as a distribution day. So this will depend. So currently your distribution day count is one. If going forward, if this distribution day counts get elevated to more than like 4, 5, or 6, then markets will get downgraded to uptrend under pressure. If not, then markets continue to remain in confirmed uptrend. Talking about the top gainers and top losers for the day, Shree Cement was a top gainer around 2.6%. Another cement player, your Ultratech Cement was around 2.4% up. ICICI Bank and UPL were around 2% and 1.5% up. Bhartiya Airtel by around 1.3% and Nifty by around 1.1%. Talking about the losers, Britannia, your FMCG player Britannia lost by around 2.3%, Hindalco by around 2.2%, Eicher Motors by around 2.03%, M&M by around 1.9%. M&M came up with its Q1 FY23 results today, and the results was a minor miss on the estimates. We'll be discussing the results in the latter half of the session as well. So Reliance declined by around 1.52% and Hero MotoCorp by around 1.3%. Talking about the sector view, as you can all see, it's a mix of green and red, which can be seen that it was like, no major winners like across the sectors we can see. Nifty Financial Services, your Nifty FMCG, IT were the ones that advanced higher. Mainly your banking and financial services were the ones that advanced higher. Nifty IT was the major gainer, around 0.64%. Nifty Auto was your major loser. As you can see, major players such as your M&M and your Hero MotoCorp were the major losers. So had a major impact on Nifty Auto and declined by around 1.1%. The other major notable decliners were your Nifty Media and Metal, which are declined around 0.52% and 0.44%. Talking about the major event for the day, your major event for the day was your RBI policy meeting, and which happened in morning. Uh, can you please switch off the camera? Thank you. So RBI hiked its repo rate by around 5.50 bps to 5.4%. So around 140 bps of hike in the current rate hike cycle, and it's higher than the pre-pandemic level and highest since August level of 2019. SDF was adjusted to 5.15%. MSF and bank rates were also adjusted to 5.65% from 5.15%. So RBI maintained the CPI inflation forecast at 6.7% for FY23 and retained its growth forecast at 7.2% for FY23 as well. And the real GDP growth rate for Q1 FY23 came in at 16.2%. So FDI investment was the highest. So it came at around 13.6 billion Q1 FY23 compared to around 11.6 billion Q1 FY22. Some other notable comments from your RBI meeting that I would like to discuss as well as the geopolitical shocks that has been happening across the globe, which makes your inflation trajectory still uneven and uh, I, uh, uneven to predict for major central banks, including RBI. Talking about your commodity prices, the commodity prices have cooled off from the recent highs, but it still remains elevated considering the demand outlook weakening across the globe. Some other major notable comments from the RBI was that edible prices are likely to soften further, which will bring a major relief to common man going forward. And the RBI has assumed the Indian crude oil basket at around 105 per barrel. So the crude oil is currently Brent crude oil is currently hovering around 95, 96. So if it stays below the the basket going forward, then we can see, CPI estimates getting downgraded, or the CPI easing going forward in the coming time. So RBI has also released its Q1 FY24 CPI inflation forecast, which is much within their 4 to 6% price band as well. It's at 5%. So they're expecting that in the by the Q4 or FY23 and by the Q1 FY24, your inflation to come under control. Talking about Titan results, Titan presents a very robust set of numbers where it did beat estimates, and the beat was majorly on the EBITDA margin, around 16 bps to 13%. The jewelry business, which is the major contributor to the top line and even to the EBIT as well, grew by around 22%, and EBIT margins for the jewelry business came at around 12.9% versus 11.7% QOQ. Some comments from the managing director as well. They feel that the financial year has begun well for them and has delivered a strong performance in Q1 across the business segment. However, despite challenging macroeconomics, the outlook for the remaining quarters, according to the company, looks positive, and they continue to be investing in the plans in India as well as the international geography. The company added around 125 stores during the year, and the retail chain is around 2,303 stores across 366 towns at around 2.9 million square feet. And overall, even in the jewelry business and in the wearable watch business as well, they're seeing improved performance across quarter on quarter. Talking about on the technical perspective as well, overall, the stock is accumulating in the right-hand side of your cup base, which is a real good sign. And it's still 12% to pivot, but uh, with a 12% to pivot. But the cup base is a stage one cup base, so it's a lower stage cup base, which can be used or which can be seen as a good study going forward. And people, I mean, post today's results and with the market reaction and the market movement that is happening within the stock in the last few days, can the stock can be kept on the radar as well. Talking about the other notable result for today was M&M. So M&M has been rallying after its consolidation-based breakout, and it's around 26% up from its pivot. So I mean, even a marginal miss on the estimates led to profit booking in the stock as well. So the revenue grew by around 67% YOY. EBITDA margins contracted by 200 bps YOY to 11.9%, and PAT up by 67% YOY. Even with a marginal miss on the estimates, what we can conclude is that the result wasn't that bad. But post a strong rally in the stock, even with marginal miss on street expectations, can lead to profit booking in this stock as well. Some key experts from their recent presentation is that they on the farm segment they had a market share gain of around 0.9%, and the market share is at around 42.7%. In the auto space they have in the SUV space their market share of around 17.1%. In the farm segment they've experienced the highest ever domestic volumes. Similarly in the export volumes as well, that was really high. And in yesterday's Stock Darbar also, we had a discussion on the Scorpio N, where bookings came at around more than 25,000 within the first 1 minute, and total bookings is in upwards of $2.3 billion, which easily provides your order book of next 1 year for within the segment as well for the company. So overall, if we talk about the chart and the ratings for the stock, the ratings have been really superb, and even the chart did provide, the stock did provide a breakout on above average volumes in a weak market, and the stock has been rallying since then, and it's nearly 26% from the pivot right now. And if you ignore today's profit booking session, the stock had been rallying in just one way. But I mean, post the minor miss on the estimates, there can be some kind of profit booking in the stock going forward, and maybe some kind of decline or some kind of consolidation in the stock as well. So talking about the global macro data, so US will be releasing its average hourly earnings, non-farm employment change, and unemployment rate today evening at 6 p.m. And it's a major data to track, which will provide how the labor market is faring in the US at the moment. So it's expected that around 250,000 jobs apart from the farms are expected to be added in US for the month. So and around the unemployment rate is expected at around 3.6%. So talking about the chart of the day, the chart of the day is Asian Paints for us, and Asian Paints have delivered. Asian Paints is the biggest decorative paint company in India, and it delivered a strong set of numbers as well. However, with the commodity, I mean the crude oil inflation and the crude oil being highly volatile, The margins of the company continues to remain subdued. Uh, and even the EBITDA margins have like around contracted to around 18.1%, which is much lower than the pre-pandemic levels of around 20 to 21%, 22.4, 21%. But according to the management as well, the management has maintained a double-digit volume growth guidance for FY23 and 24, which is led by tier 3 and tier 4 cities and new product launches. And even the premium and luxury product category is expected to show good growth in tier 1 and tier 2 cities. On the margin front, they are commenting that the gross margin is expected to remain subdued for a quarter as well, around 38 to 40%. And by the end of, or maybe in the second half of FY23, it's expected to come back to around 42%. The company is expected to take price hikes of around 0.5% on the portfolio level as well. And the management is expecting that the raw material inflation will ease off in the second half of FY23 as well. On the expansion of product portfolio, the Asian Paints launched around 10 new products in Q1 FY23 across categories. And on the network expansion, they have added 5,000 new retailing points in Q1 FY23, and 31 beautiful home stores have become operational. So the home decor is around minor on the top line, around 2 to 4%, but has potential to grow in the coming years. So talking about the good qualitative and fundamental aspects about the company, which can easily be seen in the EPS strength, which is really strong at 88. If we talk about the chart for the company, you can see good accumulation on the right hand side of the base with your RS line trending higher as well, which is a really good sign. And the stock is just 3.5% off highs as well, and 4% to the pivot. So, I mean, in the market still in confirmed uptrend. Let's see how the stock behaves around the pivot, and whether the stock is able to provide a clean breakout or not in the coming time on above average volume. But I mean, with a stellar set of results and with a good management commentary provided by the management in the recent results, it can be a stock to watch out for by the market participants. So thank you guys. Now enjoy the weekend, but do connect with us on the pre-bell and the after-hour session in the coming week as well, and do go through the learning articles and the weekly mailers that we'll be sending off, and keep up on the learning curve.